The Biden administration, speaking of banks, caused quite the uproar a few weeks ago when it said that the IRS would now require additional reporting for bank accounts with transactions over a $600 threshold. Now, the public, probably you, there was an outcry, right? Because that amount was pretty low. The amount was then changed to $10,000. But lawmakers say it's still going to impact most Americans. It's a confusing topic, and now we're being told that that's even changed. So we're going to bring in an expert to break it all down. Chris Hobart from Hobart Financial Group in Ballantyne joining us now via Zoom. Okay, so let's get right into this because this did cause an uproar. People didn't understand what was going on, why it was going on, and now it's completely changed.
Well, that's exactly it. The original proposal was to say, look, any bank accounts that have inflows and outflows of $600 would need to be reported to the IRS. And a lot of folks threw their hands up and said, whoa, this is a huge invasion of privacy. The concept behind it from the IRS's standpoint is, look, we're trying to find people evading taxes. It was positioned that I was going after the ultra wealthy. But at the end of the day, that $600 threshold, it was really focused at going at anybody that was making money under the table. And currently, about 10 to 12% of the GDP or gross domestic product of the United States, it is what's called shadow economy money. So when this was introduced, it was a smack in the face to a lot of folks saying, you're probably going to have to pay taxes on some money that historically you haven't had to pay taxes on. Well, all that outcry, they said we're going to increase it to $10,000. That was earlier last month. And again, still outcry because folks said it's still going to impact too many people. Just this past week, in the newest revision of the Build Back Better plan, it's been taken off the table. It's not part of the plan. What's important to note here, and this is the key, none of this has been written down into law yet. So until it is officially in law, we don't know if it's 600, 10,000, but the current iteration says there will be no reporting of any bank transactions, be it 600, 10,000, or unlimited. It's off the table for the current bill.
So Chris, part of the reason for this being included in this Build Back Better plan is because the current tax laws that are in place sometimes aren't actually being followed. And they're not catching these people who should be paying taxes on large. We're not talking $600 amounts. We're talking large sums of money.
Mm-hmm. Well, and that's what's so interesting. Again, the positioning initially was that it's to go after the upper 1%. But if you're tracking accounts at the $600 level, let's face it, that's not the multi-billionaires that they're going to be catching in that process. At the $600 level, we're talking about hairdressers that cut hair at home. We're talking about nannies. We're talking about babysitters. We're talking about all those areas that do owe tax on that money. I do think that's the important thing to point out. Whether you're a gazillionaire or you're kind of making money under the table, taxes are due on that money. I think the key here is it was positioned initially that, hey, we're going after the big folks, and it was very evident that it was actually coming to
include
really
everybody.
Regular Americans.
That's right. Chris Hobart, thanks so much. Always love having you on. You give your knowledge and you calm us down when things make us scared. Thanks so much for joining us.
Thank you.
All right, let's get a check.